morning, guys. It's Simon with Trade and Perform Coaching. It is Wednesday morning, the 28th of June, oil inventory days. So let's get the disclaimer out of the way and then just get rolling. Important disclaimer and reminder for all traders and investors. This webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, currency trading have large potential rewards, but also large potential risks. Be aware of the risks and be willing to accept them in order to invest in the futures and options markets. Don't trade with money you can't afford to lose. The website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed in this channel. Past performance is not indicative of future results. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. Okay, audio, video, there's only a couple guys in this morning, which is odd, but I wonder if the link's okay, but I reposted onto Twitter, so I don't know where everyone is, but I'm not going to worry about it. And it is 8:13. Guys, is the video or audio good? I don't see any messages on Skype, so I'm going to assume we're all good in that area. It is. Okay. Well then, and the link was obviously good. It went all the way to South Africa without issues, so we're happy there. So I want to discuss something out of the gate that's very, very important. That's fine. It's still very important, and I think it's worth covering, right? This sequence yesterday, okay, where we got stopped on this level, right? Wait, sorry. Many people got stopped on that trade through that level, okay? And then subsequently had to be able to come up with a trade at this level. So I have practiced this and missed many times, meaning I've gotten stopped and then failed to execute. I got stopped and then failed to execute on the following trade, which I know is a high odds. So I want to step through this just for a second really clearly so everyone understands what happened. We went from 37 down to 27. That's 10 points. Normally, that's a key area for us, right? We've watched this 27 to 31 get tested multiple times and hold repeatedly, right? We knew that Janet Yellen was speaking and that raises red flag conditions, okay? So when you're in that circumstance, there's several pieces that go to taking that trade, that sequence properly. Number one, anything past 10 points in this environment you know is golden. You have to be able to contain the fear that the market's just going to melt straight to zero with being able to stay on your trade plan. Hence why you need your trade plan written and some kind of checklist to go through, right? The second part is you have to absolutely accept that if you're trading while there is a Fed news event, non-farm payrolls, quad witching, futures rollover, am I missing anything? Non-farm payrolls, quad witching, Fed day, okay? I don't think I missed anything else. Those are red flag, high water events. If you're going to step into the water when the water's rough, right, you've got to expect that they're going to come and occasionally you're going to wipe out, right? There's no free ride all the way through, okay? So the next step in that process of sequencing is you have to be able to envision that you're going to take the stop here and know that this is from 37 down to 20, essentially, is a 17-point rotation. Even though in the worst of markets, that's a good rotation to look for a counter at that location. And in this market, under most circumstances, i.e. not red flag, I would expect a significant counter rotation from that area, right? So you have to envision taking the stop, right? Understanding that that stop is an acceptable part of your trade plan, and then going, my next entry, if I take this trade, is going to land here. Or you go, I'm not taking this trade because we're in red flag conditions and I'm not willing to trade, but otherwise I have no idea how one would figure out that this was going to simply sweep without a counter rotation and that this would hold, right? That's a perfect world kind of scenario, right? And if you only trade in, the only way to fix that would be is I don't trade unless there's 15-point rotations, which means you basically didn't have a trade for 99% of the time since January, right? So I want everyone to understand, I got upset that I got swept. No one likes to get swept for 4 points, which is, I believe, what my stop was, 4 points on that trade, okay? I got swept. It was on a full-size trade, okay? And no one likes to have that happen to them. But I have trained my brain to forget about that stop, okay? And it took me a long time, don't get me wrong. This is probably the 3rd time in the past year that I've executed this properly. Come in and then be right at the top of the next level and ready to take the next stop. That's the only way to make that sequence work, okay? And then accepting, so I want to step back one step further, accepting that I might end up with 2 full stops back to back, right? Because we could have gotten this sweep over here. We didn't, right? But we could have. If you don't accept the possibility that those 2 sweeps can come back to back, or that you can have 2 full stops during the day, right? And that's my limit. The only way to avoid that is to say, well, if I take 1 full stop, I'm done for the day, right? That's the only other way. Or the third way is to go, I don't trade red flag conditions, right? It's hard enough. When I don't have Miss Yellen speaking, I'm just not going to trade it. Those are basically your choices, right? But if you had executed through, I spoke to several people. Some people stopped trading right here, okay? Some people lost the fact that we were 17 points down and keyed for a nice fat rotation here. Most people didn't, but some did, right? And you have to know we're keyed for a big rotation here. Why do we know that? Tick divergence into the low, into a naked volume point of control. We highlighted this in the market. I had it written down in my notes. I knew I was willing to take a loss here, and I said it in the pre-market. I was willing to take a loss here. If I took it here, I was definitely taking it here. That is the only secret I have to having been profitable yesterday versus being down, was that before I got to this point, no matter what happened here, I was going to take a trade here. And so a lot of work has gone into getting to that point in primary work of visualization. And in that visualization, I don't visualize the positive because that doesn't trigger any of my emotions. I visualize stop here, coming back the next day and taking my normal trade. Okay, and if those of you who have been with me for a long time, it's rare for us to get 2. I don't know if we've ever had two full stops back to back 2 days in a row ever. I don't know since I've run this room. Maybe once in March, I think I remember 2 years ago, we had that. But that was it. And that stops me for the week, by the way, if that should happen. And that's my safety valve to save my account. Let's go on to today. We are currently trading at 24.2750. We are slamming right up into resistance. So this is a bit of a tricky area. Okay, so this is a bit of a tricky area. This whole thing is served as support and resistance, okay? This is a return to the scene of the crime. We're opening right up into it, okay? And this whole thing back to 31.30 is a legitimate, 26 to 31 is legitimate resistance area. I don't know where they'll pick to stop. What you can use to help with that is look at the opening print, and then if we get underneath or above, and the backside test to help you pick direction. I obviously think that they're probably going to make some kind of attempt, particularly on NQ, to push back to the downside, right? And that ES will follow. So remember the PA from a couple of weeks ago. I'm going to try to go through this and get done at the correct time frame. The PA from a couple of weeks ago was NQ got weak, rotation out of NQ and into ES. So I'm going to show you that really quick so we can see it and no one is confused, okay? Okay. Squeeze this down. We can actually look at it, but we don't need a 5. We can use a 15 to see this more clearly. Okay. NASDAQ's on the bottom. Bring it up so it's a little more pronounced. NASDAQ's on the bottom. ES is on top. Notice when we melt here on the 9th, right? See when we melt on the, normally it's in lockstep. You can see that all the way through here, right? As a matter of fact, we had more weakness in ES than we did in NQ. NQ melts, right? ES never melts. So the key difference there was while we made it past this last swing low, we never extended past the second. We broke two significant swing lows on NQ. We never did that on ES. And you can see as we continue to get weaker, the responses to the upside. So I want to remind you this because everyone seems to forget. Look at the upside responses back up, right? So the following day, this is the big down day on Friday. What did we get? We had balance on that Friday, closed near the high of the day, and gap the following day. Very likely that we end up with balance today. Okay? In balance at the top, I'm looking for tick pushes, high tick pushes without pushing new high price. That's going to be a short entry for me today. I'll tell you now, I'm willing to take a loss on that. Okay? Tick divergence at the high. Again, short entry for me. I'm willing to take a loss on that. Okay? Tick pushes at the low and 5-minute tick divergences at the bottom for the pushes back in. This, if you want a date, this is what I'm expecting as a model. Okay? We could potentially have this, where we have one down day. We initially, following day, we try to push up, come down. You'll still see what we got the U-turn at the low of the day, late in the afternoon, and push back up. And these pushes up were consistent through here, even though, and particularly when NQ was melting, right? We still got consistent pushes to the upside. My encouragement is don't get bearish in the hole. If we're down 15, my suggestion is not to try to short for the down 20. You're setting yourself up for failure. I would suggest you look for what are the keys to getting the counter rotation and turn back up. Because of the expanded range yesterday, if you cannot take a stop without being harmed, I would focus on 10 points with tick divergence, right? To stay on the safe side today until we see what we get, right? We will know past the first hour, and then we want to see if there's really truly a change or that was all driven by Yellen. Do we get chopped for the first hour and then the market decides on a direction? I don't know. We'll find out. Or do we get open drive lowers today out of testing key support and then roll down, right? So 10 points on the long side, 10 points. 5-minute tick divergence is a definite setup for me. Everyone should see this. You can build your own chart if you need help with it, right? It's oil inventory day. I won't be trading oil at all. It's obviously been short almost every single Tuesday, but whatever. They can have it. It's not my level of stress that I'm interested in trading. Okay, levels below. I'm very committed to taking a trade in this location here, okay, and I'm very committed at this location here. I want to say that again, 24.1250 to 24.10. I'm close to blind. Notice there's no naked VPOCs in here, but there are pointed controls from the TPOs in each of these areas. 2400 is 20 down. Right, psychological level. I would rather get the trade from 2398 to 2395 location for a bounce out of that area, but I wouldn't be surprised if they take it from 2400. Again, using tick divergence to help out from that location. And then finally, 2391.50 to 2389. That would bring us down almost 30 at that point, and then you have this if we really melt. But those are my key locations. All of these that are untested from below I'm interested in. I'm leery of 24.16 not interested. Really, it's been tested numerous times. I would suspect a break. And then I'm interested potentially in this 24.19 They blasted it at the end of the day, but it held really nicely. And I want to see what they do with NQ out of the gate. Other than that, it's the same trade plan as yesterday. Deep breath. The range is expanding. The overnight range expanded considerably. We're opening inside a prior day's range, but we traded outside of the range overnight, right? We have a total range here from 24.13 to 24.29 of 16 points, right? So that's a major expansion in the overnight. That's telling us, hey, heads up. Range is going to expand. Don't take the trade, right? Don't take the trade expecting it to be easy, right? Don't take the trade expecting it to be easy. Quite the opposite. Hold on one second here. Expect it to be difficult, right? Expect the range to be very fast. If you are trading NQ, right, be prepared with even 10 points to have it stop. People are going to be nervous there. Closed under the 50-day, all of the above. I will post the bond zones here in just a second. Kind of missed on the low so far, but I got it on the high. Let's see if I can do this quickly. That's the 30-year node. Again, these are still pretty much in beta. And if I continue to get good results, I'll post them. That's it. But that's what I'm interested in, are those primary areas for longs and shorts. And again, we're opening up right near the high. Again, I'm not sure how the market's going to respond. Let me get tick in. Is everyone clear on what the trade plan is? John, I just posted them to the Twitter stream. I'll post them here too. There you go. It's in the chat now. Again, NQ is opening up 57. This is the white zone. I really want to try to work a short out of this area. Of course, I have no idea whether they'll actually give them a short in that area. And we're all the way back up to 57.92, which opens us right into, and right at this 57, right below this 5700 level. That's a psychological level. There's single prints below to provide support, gap fill, and then this is the area 57.18 to 57.55, which is a mile. This is the 50.60. All of this I'm interested in seeing if I can find responsive sellers in. So that's kind of my 2 cents. So we'll see what they do right out of the gate. Does anyone else have any other questions? Is the trade plan clear to everybody what we're looking for? Tick pushes, tick divergence, tick pushes to new high without new high price, and vice versa. And then we'll see where they go off the open. My guess is they'll push NQ down here pretty quickly. Opening print. Here's the opening print over here. Wow, we just have to expand this out. Move that. I'll fix it in a second, guys. So notice ES pushing, NQ not pushing, right? That probably is the opening print right there. Again, rotation out of ES into NQ. This is a key area right here on ES if you're taking the trade. This 30 served as resistance numerous times. Okay, so I am fading up into and through this 31 level, just FYI, so no one's shocked. If I get caught in open drive higher, I get caught. That is a gap with the potential to get caught in an open drive higher, just FYI. So I've taken 29.50 and 29.75 and 24.30. Again, I might get run over right out of the gate. That's about as aggressive as you can get into a gap up. I just know this is a key area. Thank you. Trying to push to a new high. Tick is positive 860. So again, I got to get below that opening print on ES, or it's all for naught. Let's expand that a little bit. There's the backside test of the open print. We're down into these single prints and to fill in the gap again here. So again, make sure you know your risk and that you're comfortable with it. Taking a scale here at 28.25, if they'll give it to me. That's done. Coming into gap fill on NQ. Closing my ES right here, market. I closed on that gap fill. Okay, now I'm just going to relax and wait and see what happens. Backside test is the obvious target here. Nice job, Ron. Anyone else take that trade? That was very aggressive off the open, but that was a key area. Okay, and we have I need to make an addition to the chart. There is a naked VPOC at 24.0450. Thank you, Bill. I missed it. Okay, so just so we know what's there. Again, this is into the backside test of the white zone, which is why I've covered this short. I'm not bearish. I'm not trying to make it go to zero. I thought NQ would that they would try to press down. My concern is, and the reason why I'm not bearish is that everyone's going, nice job, Mari. My concern is that everyone's going to try and short NQ. And if it melts, it melts. It's all right, but it's actually still positive on the day. Same thing with ES. If it melts, that's fine. But remember, we don't have the driver today. The first hour has been chop, right? So I've been very careful not to get bearish in these situations because it causes me an exorbitant amount of pain. Nice. You might get it, Ron. They might come in and fill the gap. Remember, the odds are low that if we don't fill the gap in the first hour, the odds get lower. That's in both bull and bear markets, right? So I may have covered too early. I may have not, but that's a good way to start the day. Let's move some of this information over to the right. Ron's, by the way, still writing this. He's moved his stop to break even. Net break even, true break even. I think we can stop the market preview. That's a great way to start the day, guys.